This is all about Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin. That's little b for the currency and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Galen Moore, filling in for Christine Lee this week and checking in, as we always do, on the Bitcoin price. 46,387 even at the moment, down just about 20 basis points over the past hour and a little bit over a percentage point over the past 24. The CoinDesk Bitcoin Price Index, the XBX, is the most reliable source of the Bitcoin price for institutional investors. Top stories in the news today. It is Bitcoin's birthday. More specifically, it's the 13th anniversary of the date on which Satoshi Nakamoto mined the Genesis block of Bitcoin, running the Bitcoin software for the first time. The mining of the Genesis block on January 3, 2009 followed the publication of the Bitcoin white paper on October 31, 2008, and preceded Nakamoto collaborator Hal Finney's famous Running Bitcoin announcement by 1 week. The Genesis block famously included a headline from the London Times newspaper, "Chancellor on the brink of second bailout for banks," which served both as a timestamp and a shot across the bow of global finance. As our former CoinDesk colleague Pete Rizzo noted in a Twitter thread today, there was no reward for the Genesis block, and Bitcoin was not operational as a network until 6 days later when Nakamoto released the Bitcoin code. And as the Bitcoin network becomes a teenager today, Bitcoin, the tradable currency, is showing some of the signs of adolescence in the now formidable markets on which it trades. Uncertainty seems to reign for the moment as net flows of Bitcoin into addresses associated with cryptocurrency exchanges are turning positive for the first time since mid-August. That means more Bitcoin is flowing onto exchanges than off. This comes at the close of a year in which dominant outflows took Bitcoin held on exchanges down to record lows. The chart here shows the 90-day moving average of exchange net flows turning positive in the final week of 2021. Now, while a secular trend has moved Bitcoin out of its one-time position as a dominant quote currency on crypto exchanges, Bitcoin moving on to exchanges is in general seen as a bearish signal that investors are readying to sell. The last time it swung positive was in May 2021, as China was announcing its crackdown on Bitcoin mining and exchange, and that came just days ahead of the May 2021 crash. And speaking of Bitcoin mining, our first guest today has some experience in that area. Jason Deane is a cryptocurrency analyst and an individual miner himself. Welcome, Jason.
Oh, it's great to be here, Galen. First event of the year for me, so it's great to be here to talk with you today.
And what a day, right? January 3rd, a day to celebrate. Bitcoin becomes a teenager. Let's talk about that for a minute. What does that mean to you as the Genesis block mined on this date? What does that mean to you as an individual miner?
Well, I mean, it's an historic day. I mean, obviously for me, I wasn't aware of Bitcoin back in the day. At the time this was going on, I wasn't involved with the whole cypherpunk movement. But it was a few years later that I first discovered it. And here we are now talking about Bitcoin being 13 years old. I mean, I remember having conversations with people where we were saying, Bitcoin's 5 or 6 years old. And suddenly we are here, a teenager. And how things have changed from where we are now. As you mentioned in your intro, that I am a miner. I've been mining actually Bitcoin for quite a few years now. Started as a hobby miner at home with the machine we nicknamed Big Blue back in the day, which was a homemade device that we had here. And I now mine with quite a few ASICs over in Siberia. And in fact, I was out there visiting it recently. And it just goes to show how fast this industry has grown and how big this thing has got in the last year and what is coming up. It's astronomical.
We've seen that actually over the past week with Bitcoin Hashrate reaching record highs, recovering above the previous high, which was set ahead of that. You can see it here on the right side of this chart that we're looking at. The orange line represents the hash rate, and the white line there is the Bitcoin price in dollars. And you can see just here on the very right edge of the chart that peak coming above the prior peak, which was, I think, set in April of 2021. Is mining as an individual? I mean, you mentioned your beginnings as a hobby miner. I think those days are kind of gone. What is the state of mining today? Can a small investor hope to participate? Is Bitcoin still the kind of decentralized network that it once was?
Yeah, I mean, this is one of those things we can argue a case for both sides, I think. But look, if you're an individual now and you want to start mining, you can do it. You just can't do it really realistically from home in the way that you could have done, a few years ago, although it's quite a few years now. But it is possible. There are a lot of services out there where you can buy a single ASIC or even sometimes part of an ASIC miner just to get your sort of foot in the door, so to speak, and learn the trade effectively. I mean, it's pretty simple, but if you can understand the numbers and you understand the trends of Bitcoin and what you're doing with some good detail, it's a real advantage. But yes, it's possible to do. It's certainly a lot more expensive than it used to be, and you probably can't do it locally, as I say, but it is still possible. And I do believe Bitcoin is still very decentralized and probably always will be.
Certainly can't do it here in my home state of Massachusetts with the energy costs here being what they are.
No.
As an analyst now, what do you take away from? I think we've seen it over 200 exahashes. If I didn't misread that chart just now, what do you take away from that as a signal? I mentioned early on we see Bitcoin flowing onto exchanges in a kind of a reversal of a recent trend, but at the same time, obviously, more capital flowing into the mining side of things. What is that? What's that a signal for? How should we read that going into 2022?
Well, I mean, first of all, also, we've got the obvious one, network security. Network security in Bitcoin is at an unprecedented high now, and that is just going to keep going. The investment at the moment in mining equipment, in Bitcoin mining generally, is absolutely astronomical. These companies are now publicly listed or going public because they want the capital to invest in this equipment. And we've seen, I'm sure you've seen all the reports recently of all these huge numbers of ASICs that have been ordered by companies all around the world, but particularly in the US at the moment, which is a big growth area. And we are just going to see that hash rate continuing to rise. And I've heard talk of something like 200 to 250 exahash being added next year, or this year now, in 2022. And when you consider we're only about 190-ish, 200 now, we're talking about a doubling of the hash rate over the next sort of 12, probably to 24 months, I think it will take a bit longer, but I have seen forecasts to that level. I mean, that's very significant increase, and that gives you some idea of the confidence that these companies and individuals like myself have in the Bitcoin network and Bitcoin itself as something of the future.
What do you think is driving it? A goal to run a mining operation at a profit, or is it more a goal to accumulate Bitcoin at a price perhaps lower than you might be able to secure it in the open market?
Well, both of those are valid strategies, actually. But we do know from the big mining operations that the vast majority of Bitcoin that they've mined, they've actually held. And I'm the same, actually. Everything I mine, I hold. So this is a trend we've seen right across the board. So there is a good argument, because clearly you can mine Bitcoin for less cost once you've got past the capital expense than you could buy it for. But, the other part of this is profit. If you want to turn back into dollars and fund your operations, and some people do that, of course you can do that as well. But yeah, this is a growth era. We are in the gold rush period, I think, of Bitcoin mining right now. It's happening right now.
Long-term capital coming in at this stage. What else should we be looking at if you can sort of think about some of the things that you're focused on, as an analyst, as an investor, start of the year here, what's going to be important for us to watch in 2022?
Well, the words I always use are adoption and education, really. And the two things, of course, are very linked. Particularly on a retail level, it's pretty hard now to go anywhere without having some exposure to Bitcoin. So even if you're not involved with the Bitcoin industry at all, it will keep poking you. Now, you're going to see it around more and more, and that's going to ultimately drive your interest and adoption. Institutionally, we're also seeing that education process carry on, and I do believe we're going to see some quite big moves institutionally this year. And I do think we are going to see at least one other country adopt Bitcoin as a legal tender this year as well, possibly more. So big stuff going on. I'm very bullish for the future, as you probably guessed.
Great. Well, thank you, Jason, for joining us today.
It's great to be here. It's great to be here. Have a happy Bitcoin birthday. See you next time.
Indeed. Happy Bitcoin birthday to you as well. That was Jason Deane of Quantum Economics. Coming up, more Bitcoin markets analysis with Wave Financial.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Looks like it's time for the chart of the day. So one trend to watch in the crypto markets is the movement of DeFi assets over the past week. The chart here shows the 7-day price action of the DFX, the CoinDesk DeFi index, versus Bitcoin, Ether, Solana, and Doge. The DFX had lagged Bitcoin and other cryptocurrencies in the second half of 2021. That trend was flipped for the moment over the holiday week as Bitcoin and others had a weak close to the year, while DeFi assets rallied. The DFX represents a market cap weighted basket of 10 decentralized finance currencies. The largest by weight are Uniswap, Curve, and Aava. Uniswap alone makes up about 40% of the index. And joining us now to talk markets is Justin Chuh, senior trader at Wave Financial. Welcome to the show, Justin.
Hi, glad to be here. Thanks for having me.
So 2021 was kind of a year for layer ones, I think, looking back. Ethereum and a few new alternatives outpacing Bitcoin by large multiples. How are you thinking about Bitcoin going into 2022? I think, as an investor, you focus in don't focus exclusively on Bitcoin. So what are the sort of factors that could reverse that 2021 dynamic in 2022 as you're looking ahead?
Well, we're still looking at Bitcoin, it's still bullish on a long-term macro level. Bitcoin is still closing at, higher lows than before. Previously, we're kind of still just in this range between 53,000 and 42,000. And it looks, similar to May of last year, practically. And I still have a bullish outlook on Bitcoin itself. And what would be interesting to see this year is these new DeFi 2.0 protocols using wrapped Bitcoin as a potential bond. That could create some excess demand for Bitcoin itself and more utilization cases.
Yeah, certainly we've seen the growth of some growth of demand for that, and I guess DeFi 1.0, although I feel a little bit silly saying that. But I guess, I don't know if at this point we could say that that's been a significant factor in terms of demand for Bitcoin. Do you think maybe potentially that changes, if I'm understanding you right, as a new wave of Bitcoin of DeFi applications comes into its own?
Yes, I certainly think that, as more applications allow Bitcoin to be used as collateral, there's going to be more demand for it. And that's probably also why we're seeing some of it going back onto exchanges, because that's an easy way for retail investors to wrap their Bitcoin and get it onto the various chains.
Right. Yeah, that makes sense. What are some of the sort of factors when it comes to evaluating different things that can be used for collateral in that way? I mean, you've got stable coins, obviously, Bitcoin, and then I think, potentially people would hold up other, layer one assets as potential collateral there. There's even talk of using NFTs in that way. How does that kind of landscape, if you're going to sort of think of what's going to become the collateral, the dominant collateral of this space, how is Bitcoin positioned there?
Yeah, I think so. These DeFi dApp developers ultimately allowing assets to become collateral if they see a lot of people are holding it and it's composable and usable on more than one application. Bitcoin and Ether started as the main points of collateral on, in DeFi 1.0 because that's what people most commonly held. And I'm sure developers are going to allow other assets to be collateralizable.
That makes sense. Let's talk for a minute about venture dollars and crypto. I want to just get your take on this. I saw some numbers this morning for the end of the year. I think Crunchbase had 21 billion of venture capital going into cryptocurrency companies. PitchBook had 30 billion. So I don't know, somewhere in the middle of those two, I guess. And that's up from low single digits in 2020. It's vastly outpacing the kind of broader leap that we've seen in venture investments into seed and early stage startups. What does that mean for Bitcoin and for cryptocurrency in general in terms of currencies that trade on the open market?
Well, it's going to be hard for Bitcoin to go bid, right? Because these institutions are pretty much driving their capital elsewhere for other opportunities that might offer better risk reward opportunities. And, VC capital tends to go early, whereas, we've already talked about Bitcoin is now 13 years old. It's kind of late to put a lot of money towards that one asset, whereas, they might see better returns, putting it elsewhere and waiting 5 to 10 years for those digital assets to play out.
Is there a broader effect of that? Is a sort of a rising tide lift all boats? Do we see sort of potential, second order effects of perhaps startups that may be building better on ramps, whether for institutions or for individuals?
Yeah, I think we would like that. If more money does get plowed into the blockchain space, that could help improve the user experience and user interface and things like that. And that would help, could certainly help raise all boats, because that would, ultimately do what we want in onboarding more users and people into using blockchain technology.
Seems like we might have a ways to go there, and it might take a lot more venture to to figure out what's the killer app.
Yeah, definitely.
Looking ahead
too.
Yeah, right. I don't know. Do you feel like we've reached that stage yet? Do we understand what the, where the product market fit is, or is that still sort of an open question?
I think it's still definitely to be discovered, essentially. I mean, we like what we saw in the past couple of years in terms of DeFi applications, but we want to advance those a little bit. And then now other use cases are coming in for, GameFi and incentivized gaming and some other use cases on blockchain.
What do you think is going to be critical to watch as we're going into the start of the year here? We don't have to think on calendar year time frame necessarily, but at the start of the year, it's helpful to sort of think, okay, what's going to be emerging as an important thing to keep your eye on, do you think?
Yeah, I think a big investment theme for this year is going to just be other layers that can also handle smart contracts, essentially. As we've seen, Ethereum is kind of getting maxed out in terms of output, and other things are going to help in the scaling solution and can serve as, other playgrounds, essentially, to use.
So continuing, I guess, the sort of layer one theme of 2021, do you feel like there is room for new entrants, or are we thinking about growth among some of the names that we've already seen so far, Solana, AVAX, and Luna, for example?
I think the names that we've seen so far are going to get more users out of them. They're widening their on-ramps, essentially, and making the bridges and wormholes and tunnels between each blockchain, better and easier to use. So I think we're going to see a lot of this multi-chain world and an emergence of these alternative layers.
Great. Well, Justin, thanks for joining us today on All About Bitcoin.
Yeah, of course. Thanks for having me again. Happy New Year's and happy birthday, Bitcoin. Yeah.
Indeed. That was Justin Chuh of Wave Financial. And that's it for this Bitcoin birthday edition of All About Bitcoin. I'm Galen Moore, and I'll be back tomorrow for another edition of All About Bitcoin at 3 p.m. And you can join us tomorrow morning on CoinDesk TV at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.